Hey everyone, welcome back to our channel. If you're new here, please subscribe to our channel. Credit scores, those mysterious three-digit numbers that seem to control so much of our financial lives. Whether you're applying for a loan, a credit card, or even renting an apartment, your credit score can make or break your chances. But what exactly is a credit score? How does it work? And most importantly, how can you improve it? In today's video, we're going to demystify credit scores, break down how they work, and give you actionable tips on how to boost your credit score and keep it healthy. Let's get started. Segment 1. What is a credit score? So, what exactly is a credit score? In simple terms, a credit score is a numerical representation of your creditworthiness. It's a tool that lenders use to assess how likely you are to repay borrowed money. Credit scores typically range from 300 to 850, with higher scores indicating better creditworthiness. Understanding your credit score is the first step towards improving it. Now let's dive deeper into the factors that affect your credit score. Segment 2. Factors that affect your credit score. Your credit score is influenced by several key factors, each carrying a different weight in the overall calculation. Let's break them down. 1. Payment history, 35%. This is the most important factor in your credit score. It tracks whether you've paid your past credit accounts on time. Late payments, collections, and bankruptcies can all have a significant negative impact on your score. 2. Amounts owed, 30%, also known as your credit utilization ratio. This factor looks at how much of your available credit you're using. If you're using a large percentage of your available credit, it can indicate that you're overextended and may struggle to make future payments, which can lower your score. 3. Length of credit history, 15%. This factor considers how long your credit accounts have been open. A longer credit history generally contributes to a higher credit score because it gives lenders more information about your financial behavior. 4. New credit, 10%. Each time you apply for a new credit account, a hard inquiry is added to your credit report. Too many hard inquiries in a short period can negatively affect your score, as it might indicate that you're taking on too much debt too quickly. 5. Types of credit used, 10%. Having a mix of different types of credit accounts, such as credit cards, mortgages, and installment loans, can positively impact your score. This shows lenders that you can manage different types of credit responsibly. Understanding these factors gives you a roadmap to improving your credit score. Next, we'll look at some specific strategies you can use to boost your score. Segment 3. Strategies to improve your credit score. Now that we know what affects your credit score, let's talk about how you can improve it. Here are some practical tips. 1. Pay your bills on time. This might sound obvious, but it's the single most important thing you can do to improve your credit score. Set up reminders or automatic payments to ensure you never miss a due date. 2. Reduce your debt. If you're carrying high balances on your credit cards, focus on paying them down. Aim to keep your credit utilization ratio below 30% of your total available credit. 3. Avoid opening too many new accounts. While it might be tempting to open new credit cards to increase your available credit, doing so can result in multiple hard inquiries, which can lower your score. Only apply for new credit when absolutely necessary. 4. Keep old accounts open. Even if you're not using them, keeping old credit accounts open can help lengthen your credit history, which is beneficial for your score. The longer your accounts have been open and in good standing, the better. 5. Check your credit report regularly. Errors on your credit report can drag down your score. You're entitled to a free credit report from each of the major credit bureaus once a year. Review your report for any inaccuracies and dispute them with the credit bureau if necessary. 6. Limit hard inquiries. Try to minimize the number of hard inquiries on your credit report. If you're shopping for a loan, do it within a short period, as multiple inquiries in a short time for the same type of credit are usually counted as one inquiry. 7. Use credit wisely. Having credit accounts in good standing and using them responsibly is key. Make small purchases and pay them off in full each month to show that you can handle credit. Improving your credit score takes time and discipline, but by following these strategies, you can see positive changes over time. Now, let's explore why having a good credit score is so important. Segment 4. Why a good credit score matters. You might be wondering, why does having a good credit score matter so much? The truth is, your credit score can have a significant impact on various aspects of your financial life. Here are some key reasons why a good credit score is important. 1. Lower interest rates. One of the biggest advantages of a good credit score is that it can qualify you for lower interest rates on loans and credit cards. Over the life of a mortgage or car loan, this can save you thousands of dollars. 2. Better loan approval odds. Lenders are more likely to approve your loan applications if you have a strong credit score. This is because they see you as a lower risk, meaning you're more likely to repay the loan on time. 3. Higher credit limits. With a good credit score, you're more likely to be offered higher credit limits, which can give you more financial flexibility and improve your credit utilization ratio. 4. More housing options. If you're looking to rent, many landlords check credit scores as part of the application process. A good credit score can increase your chances of securing the rental property you want. 5. Better insurance rates. In some states, insurance companies use credit scores to help determine your premiums. A better score could mean lower rates on auto, home, and other types of insurance. 6. Employment opportunities. Certain employers, especially in the financial industry, may check your credit report as part of the hiring process. A good credit score can make you a more attractive candidate. As you can see, a good credit score opens up many financial opportunities and can make your life easier in more ways than one. But what happens if you have a bad credit score? Let's discuss the potential consequences. Segment 5. Consequences of a bad credit score. On the flip side, a bad credit score can make life significantly more difficult. Here are some of the challenges you might face if your credit score is low. 1. Higher interest rates. With a lower credit score, lenders may see you as a higher risk, which often means higher interest rates on loans and credit cards. This can make borrowing more expensive and harder to pay off. 2. Difficulty getting approved for loans. If your credit score is too low, you might struggle to get approved for loans or credit cards altogether. This can limit your ability to make big purchases, like buying a home or car. 3. Lower credit limits. Even if you're approved for credit, a lower score might mean lower credit limits, which can constrain your financial options and lead to higher credit utilization. 4. Fewer housing options. Many landlords require a credit check before renting a property. A bad credit score could limit your housing options or require a larger security deposit. 5. Higher insurance premiums. As mentioned earlier, insurance companies in some states use credit scores to set premiums. A lower score could result in higher costs for insurance. 6. Impact on employment. Certain jobs, especially those in finance or management, might require a good credit score. A low score could hurt your chances of landing such positions. The consequences of a bad credit score can be long-lasting, but the good news is that it's never too late to start improving your credit. By following the strategies we discussed earlier, you can work towards building a better credit score over time. By taking control of your credit, you're taking control of your financial future. So start today by checking your credit report, identifying areas for improvement, and implementing the strategies we've discussed. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more tips on managing your finances and building a better future. And if you have any questions or experiences with improving your credit score, drop them in the comments below. We'd love to hear from you.